The Floor Academy podcast is sponsored by Trelama, the trade labor marketplace, where businesses can find skilled trade labor, such as flooring installers, and where flooring installers and other skilled tradespeople can find permanent or project work. You can set up your profile at trelama.com, TRALAMA.com, or download the app from the Apple App Store or Google Play. And remember, Trelama is always free for skilled tradespeople. Welcome to the Floor Academy podcast. I'm your host, Kyle Hadeen, owner of Illustrious Hardwoods in Phoenix, Arizona. We're here talking with flooring professionals from all across the country about the issues that matter to you. However, this week, it's not a flooring professional. This week's guest is Austin Thompson. Austin is a good friend and an insurance agent with Liberty Mutual. He spends his time helping us understand how to look at our coverages and what they actually mean. Do you really need $1 million in coverage? Can you go with the state minimums? How can I protect my tools? Listen in to find out. Austin Thompson, are you on the line?
I'm here, man.
Awesome. Thank you for joining us on the Floor Academy podcast. You are a friend of mine here in Phoenix, and you specialize in auto and home insurance, and you can do a couple of other things. And I learned a lot from you, being in a BNI group with you and being educated on what my policy actually meant and what I was getting out of it. So I think there's probably a lot of business owners out there that really have no idea what they're getting covered, and they just go with whatever their agent tells them to go with, and that's probably not a good idea. So why don't you go ahead and introduce yourself, let us know who you are, how you got into doing what you're doing, and we'll take it from there.
Yeah, sounds good, man. First off, I'd just like to, thank you for having me on here. I always like talking about this and educating people. So, being able to come on a platform like this and support you and, let people know how to protect themselves is fantastic. So I really appreciate that. But, like you said, I'm Austin Thompson. I do work currently for Liberty Mutual Insurance, but broker through multiple other carriers as well. So we do have options when it comes to that. I've been selling insurance for about 6.5 years now, so I like to think I know what I'm doing. And I really pride myself in making sure that my clients are protected properly. So that's what we focus on. I'm just on here to educate you guys and let you know on really how you can cover yourself and protect everything you've worked so hard for.
All right. So let's start off, okay? I'm going to, I have my business and I got my car. So What am I actually looking at when people are asking me, like, what's my liability limits and what's my bodily injury limits, and like, what do all these things actually mean to us?
Sure. So in the state of Arizona, it's pretty simple. You kind of have your major coverages. So you have your bodily injury liability limits. You have your uninsured motorist bodily injury liability limits, your underinsured bodily injury liability limits. You have medical payments. You have comprehensive coverage. You have glass coverage. You have collision coverage. And then you have some extras like roadside service and rental car coverage. So I can go through kind of all of those basic coverages and kind of let you know what they mean. And how they break down, because there's a lot of numbers and slashes in there, and it can get confusing if you don't know what you're looking at.
Yeah. So let's go right through that list one by one, and we'll talk about what each one does and what it means and how it's going to affect me.
Perfect. So you have your bodily injury liability limits. That's your main coverage on the policy. This is coverage if you are liable for other people's injuries and damages. Okay. So if you are deemed at fault for an accident, you cause an accident, that is the coverage for the other people to take care of their injuries and to fix their vehicle. Okay. So you have your split limits, which, for instance, you have your bodily injury liability limits at $100,000 per person slash 300,000 per person or per accident slash 100,000 in property damage. So what that means is that first 100,000 per person. That means if you are at fault in the accident and you hit somebody and you hurt them, each person within that vehicle has up to $100,000 for their liability for their injuries. Okay, each person has up to 100,000. Okay, and then you have slash 300,000. That's per accident. So you have your 300,000 per accident. That means the entire accident liability, that policy, the max that policy will pay out for the entire accident, all people involved, is 300,000. And then you have your 100,000 for your property damage, and that's to actually take care of the physical damage to the property that you damage. So, for instance, the other person's vehicle, or if you hit a building or a wall or whatever it is that you caused the actual physical damage to that property, you have up to 100,000 for that type of coverage for that, the damage to their vehicle and the things that you've destroyed. Okay. So what's important to know, with that is that if, let's say you have 100 slash 300, each person gets up to 100,000. If you injure 4 people, all 4 of those people can't get their max of the 100,000, right? Because that would exceed the total 300,000 per accident. Okay. So it's important to know that when you're looking at your coverages. For instance, if you're carrying lower coverages, like state minimum of 15,000 per person, 30,000 per accident, you can see how that could, now knowing those separations on how that could be a problem. Because if you hit somebody and you're deemed at fault and there's multiple people in the vehicle, each person has a max of 15,000 with a total of 30,000 for the accident, right? So it's not a very large number. And usually coupled with that is only 10,000 in property damage. So if you go and hit a vehicle that let's say is a $40,000 car, but you only have 10,000 in property damage, now there's problems involved, right? Okay. So when you're carrying those low limits, now you're becoming subject to lawsuit.
So yeah, where's that extra money going to come from?
We'll get more into that. I'll go down the line.
Okay.
The uninsured and uninsured motorists. So you have your uninsured motorists. So that's coverage for yourself and people inside your vehicle. So again, that's usually always matches your bodily injury. So if you have 100, 300 for your bodily injury, you're typically going to have 100, 300 for your uninsured motorist. And that is if you, as the driver and people inside your vehicle, if you are hit by somebody who doesn't have any insurance at all. So even though it's against the law, people drive without insurance, okay, for whatever reason, suspended license, whatever it is, they do it, right? So if you're hit by somebody without insurance, it's also really important that you have coverage for yourself inside the vehicle. So that would be uninsured. And then you have underinsured motorists, which covers you if you're hit by somebody who has lower limits, okay? So if you're hit by somebody who has lower limits and they're not somebody who has assets, or anything like that, you can't sue them per se. That's when your underinsured motorist would step in, and that's usually also matching your bodily injury. So in this case, if we're talking 100, 300, your underinsured motorist would also be 100, 300.
Okay.
So that's another reason why carrying higher limits is going to be we'll get into it, but it's going to be another reason I'll explain why higher limits is going to be important, is because of those coverages right there. Then you have your comprehensive coverage, which is going to cover anything that's not an accident. So, for instance, if you hit an animal, that's technically not an accident. An animal jumps out in front of you, a deer, elk, whatever it is, jumps out in front of you. That's out of your control. That's called covered under comprehensive. Any vandalism, any theft, any weather damage like hail damage or water damage or anything like that. That's all going to be covered under comprehensive. And then you have collision. Collision is now if you're at fault in an accident. That's coverage to cover your vehicle. So collision, if you hit a stationary object or you hit another car, or like I said, stationary object like a tree or a pole or a house, That's going to all be covered under collision. If you're at fault, they're still going to fix your vehicle or replace your vehicle. Now, with both of those, you have your deductibles, right? So your deductible is you're going to be in charge of before the insurance company pays any money out. Okay, so that's what your portion, the risk on that you're taking. So if you have a $500 deductible, let's say, and you're in an accident and it's going to cost $2,000 to fix your car, your insurance company is only going to pay $1,500 because they're going to pay the $2,000 minus your deductible, $500. And same thing for comprehensive. So depending on what type of incident you have on the vehicle depends if it's comprehensive or if it's collision and your deductible. The lower your deductible, the more you pay for insurance, for your monthly premiums on your insurance, but the less you pay in the event of an accident. And vice versa. The higher your deductible, the more risk you take as the policy owner, the lower your monthly premiums are going to be, but the more you're going to have to pay in the event of an accident. And then here in the state of Arizona, most people already know it's pretty typical. We have our full glass coverage. So that covers you if you have a chip, or a crack in a windshield. We're going to replace a windshield free to cost you. Yeah. And we'll get more into that. I do want to talk about that and kind of strategies on to go about glass coverage on that. Most people don't really know. There was a stigma that they didn't affect you. And for years and years and years, windshield claims didn't affect you, but now they are. And I'll get a little bit more into that as well.
So one quick question. So in Arizona, it's standard to get glass coverage. There's plenty of states, like in Illinois, I didn't have glass coverage. Is that something I can add that on though, right? Like I would just have to pay a fee there?
So it depends on the insurance company. Most insurance companies aren't gonna offer it in certain states, like at all.
Okay.
It doesn't mean it's not covered. So it's just at that point, it's just covered under your comprehensive, and it's subject to the deductible. So depending on what your deductible is. So for instance, if you're living in Illinois and you essentially want free glass, you have glass, and you can just go with a $0, comprehensive deductible, or a $50 or $100, a real low comprehensive deductible. So if you need a windshield, now you're only coming up with $50 or $0. Now again, you're going to pay more in your premium, but you pay for glass coverage here in the state of Arizona anyways. But typically, I recommend, if you live in a state that doesn't offer glass coverage, there's a reason they don't offer glass coverage. One, it's just going to hurt your rates in the long run. And two, you don't have the rocks and chips and sand pitting and everything like we have here in Arizona. So the odds, the amount of windshields that you're going to go through over the years isn't worth paying the extra premium on the insurance.
Yeah.
If that makes sense.
No, totally. Yeah. And it's for the guys that, there's guys listening nationwide. So for those that don't know, like Arizona is horrendously bad for glass. I brought my truck back. I had to buy it because we got in an accident over Christmas break in Wisconsin. I drove it back. I think I had it in this state in Arizona for like 2 weeks, and I have a chip in my windshield. There's chips all over the front of my truck. The paint's screwed up from it now on the hood. Just rocks are insane here. Like without automatic included coverage, you would be spending a fortune on windshields, and they're not that expensive, but you could go through like 3 or 4 in a year if you actually wanted to replace it every time something happened to it. It's insane.
Right. Yeah, definitely. And, and that's also causing a problem here in the state of Arizona. So for any Arizona listeners or anybody who has full glass in their state, since we're already on the subject, I'll just talk about it. Glass claims do affect your rates. So it used to be, 5 years ago, 10 years ago, you put 5 glass claims in a year, insurance company didn't affect your rates at all. Mm-hmm. But here, now, especially in Arizona, we have a huge problem with, glass companies, charging the insurance, because you can go to any glass company and get your windshield replaced, and they could basically charge the insurance company basically anything, right? So it costs an insurance company, $200-$300 to go get a windshield done for you. But these other companies that you go through, they give you a kickback, give you $100 kickback or whatever it is. and then they go charge the insurance company $800 to $1,000 for a windshield, right?
Yeah.
So you can obviously see how that poses a problem for insurance, because the amount of premium we take in is how we pay our claims. So if we're only taking in $20 a year or $50 a year for glass coverage, but we're paying out $1,000 windshields, you can see how that can get out of hand as time goes on. So that's a big problem we're dealing with here. And so what I recommend, and here in Arizona, you have to have windshield coverage. I'm not telling people not to get windshield coverage. There's a reason there's a coverage for it, and there's a reason, we have it here in Arizona. If you have it and you have a windshield, you need a new windshield, use your coverage and get a new windshield. But there's ways to mitigate the amount of claims that you do. Okay. One, avoid those companies, because the companies that give you kickbacks, because the windshields aren't very good anyways, and they don't do a very good job, and it's technically illegal. Two, I would say keep an eye on your windshields. If you're ever getting like a little chip in it before an actual crack, chips are perfectly fine. You can get those fixed for free in most places, or really cheap, $10, $15, or you get those chips filled. And what that does is it helps from spreading, because if you don't get it filled, then it'll spread and then it'll turn into a crack, and then now you need a windshield replacement. Mm-hmm. So if you fill those chips in before they turn into cracks and before they start spreading, your windshield will last a lot longer, and you'll go from 2 windshields a year to maybe 1 windshield a year, or 1 windshield every other year kind of thing. And you'll mitigate the amount of claims that you do, because then once you go to shop your insurance and insurance company sees that you have multiple glass claims, they put you at a high risk and they rate you for it, and you actually get dinged, and you get a higher rate because you have glass claims. So any way you could possibly not do that, mitigate the amount of glass claims you have, I highly recommend that. Again, I'm not telling you not to use your coverage. There's a reason it's there. There's a reason you pay for it. Use it when you need it. Another thing too is, look, depending on the age of your vehicle and you're putting full coverage, depending on the cost of glass, it could be, for some people, it could be expensive. So also explore removing that glass coverage, because sometimes you could remove that glass coverage and it saves you like $300 a year. And you could go to, and if you pay cash at a lot of these places, depending on the make of the vehicle, it might only cost you a couple $100, to replace that windshield. So you save $300 a year on the insurance. You go through 1 windshield a year on that car, that costs you $200. It costs you $200 out of pocket. That saves you $100 a year.
Yeah.
By not having. And then maybe you don't have a glass claim, and now it saves you $300. So that's definitely, I would explore. Talk to your insurance agent. Explore your policy if you have full glass coverage. Ask them to take that coverage off and see what the premium difference is, and it may be worth it to you. Okay, so don't just automatically throw a windshield on there, because, again, you may be able to remove that and save more money than a windshield's going to cost you out of pocket, and you don't file a claim against your insurance.
Okay.
So that's another thing to think about there, too.
I'm all about saving money, man. We got to buy tools. Those things are expensive.
Yeah. Yep. Man. And especially nowadays, like, things aren't getting cheaper. Insurance isn't going to get cheaper. 10 years from now, general prices of insurance is going to be more than it was today. That's a reality. We have inflation across all industries. Things are getting more expensive. Let's save money where we can, and let's be smart.
Definitely. All right. What's next?
Well, we can go back to, bodily injury and why that's important to look at. And to make sure that you have the right coverages. Again, remember when I mentioned, the difference between, 100,000 per person. So each person has up to 100,000 with a max of 300,000 per accident. Okay. Okay. So let's say you're somebody who has, $300,000 in the bank, cash in the bank. You have 401ks, you have retirement plans, you have some real estate, you have a home. Maybe a home even paid off, or a couple homes, some rental properties. You're somebody who's accruing assets, right? Mm-hmm. And you're a business owner, right? So you have liability there. You have business. You have a business to take care of that costs money, right? To maintain and everything. That's your livelihood, right? You go and get in an accident with somebody, right? And you injure them, and they go to the hospital, okay? An ambulance ride nowadays could cost you $3,000, $4,000, $5,000, $6,000, depending on where you're at. Okay, sometimes I've even seen numbers as close as $8,000 for an ambulance ride.
That's
okay?
ridiculous.
That's just to get to the hospital, right? And then who knows? Let's say they have, they're in the hospital for days or weeks, and it could add up very quick. Everyone knows where our health industry is within this country and how expensive it is to go to the hospital and go to the doctor. So if you're somebody who has assets, who has things to lose, who has worked hard, and you're somebody who's carrying those low limits, like state minimums here in Arizona are $1,530. They're going up to $2,550. Most states across the country are like $2,550 or $30/60. That's pretty typical for the state minimums across the country. Let's say you're somebody that was carrying those limits and you put somebody in the hospital. Okay, you have $15,000 per person. Let's just bump it up because it's going to $25,000 per person. Okay. $8,000 for the ambulance ride already gone right there. Boom. Okay, that's just the ambulance ride. For a bag of saline, it's like $600 or some crap like that. So you can see how very quickly that amount of insurance could be exceeded.
Mm-hmm.
And then another one that's big is getting exceeded is your property damage. So when you're carrying those state limits, the state minimums, your property damage may be $10,000 or $25,000 for property damage. A brand new car nowadays, you can't really get, you're $20,000-$30,000 for a brand new car. What if you go and you total a Mercedes or an Audi, and now you're looking at $60,000-$70,000, right?
Yeah.
That's got to come from somewhere. Okay. So exceed your limits. The first thing that they're going to do, they're going to be like, I'm going to go get an accident lawyer. Okay. And they go get an accident lawyer. The first thing that lawyer does is does an asset check on the person that they're suing. Okay. And if they see that you are somebody who's established, they can get bank records and see, what cash values you have and what things you have to go after, and they decide to go sue you. And now you're stuck in litigation. You're having to lawyer. You're having to do all this, and you're being sued for something that, maybe it was out of your control, but you're deemed at fault for, right? Because you're in an accident.
Yeah.
And you weren't educated, your agent or whatever, or you bought it online and you're just going for the cheapest price because you don't know, and it's not your responsibility to know. That's the big thing too is, I always like to stress is it's not your responsibility to know, necessarily know your coverage. If you have an agent, they're supposed to educate you. It's unfortunate that, we can go to the online sites and go get the cheapest insurance price, but in reality, you're paying for something that doesn't suit you, or that's not right for you,
mm-hmm.
your situation, just because it's based on price and we're not educated. It's my responsibility as an insurance agent to educate you. And that's why I'm on this platform today, is to help educate people so that they know. Because now,
real quick, you're breaking up a little bit. So
I am.
I don't know if it's just the room you're in. I know I get that in my house, but they're always phone calls, guys. So it's going to happen. I could make out most of it. Basically, if your limits are low, you're going to get sued. They're going to come up with the money one way or the other. Like, you're not going to get out of not paying unless you file bankruptcy, and that's really going to screw you up probably. So just pay more. Pay from what, like a quick summary, I think is pay more on your premiums. And get higher coverages, and you have a little more protection.
Right. And again, I will tell you the truth. I always recommend, no matter what situation you are, is carrying higher liability limits. But it's really, you got to also, look at what you have to go after. What are your assets? I'm not talking to the teenagers that are 17 years old that are renting, just getting their license, or 20 years old and they have an apartment and they have nothing to their name
mm-hmm.
yet, they're not getting established, that there's nothing to sue. There's nothing for people to go after, in a situation like that. it's business owners. It's business owners and people who are established and are homeowners and everything. Those are the people that need to start thinking about, if they're carrying those low limits, bumping those up, because that's what you have to lose. Everything you've worked for the last 10, 15, 30 years, that's all subject to be taken away to save a few $100s a year on insurance.
Yeah. And so, okay, let's, I use, technically the company owns the truck. It's insured under my name, but it's a regular policy. It's not a commercial policy. So explain where the liabilities lie. Like, yes, the company has an LLC, so it's supposed to be shielded. But honestly, if anybody run to sue me hard enough, they're going to be able to get and go after the company. So, like, I'm driving this truck to work in the morning. I'm pulling my trailer. I get in an accident. What's going to happen?
Yeah, I mean, the first thing that's going to happen, obviously, is they're going to go after your insurance if you're at fault, right? Mm-hmm. So, if you're deemed at fault in this situation, they're going to go after your insurance. They're going to call your insurance company, and they're going to find out what limits are, and they're going to go after that, okay? If you are carrying those low liability limits, that person has the choice. I mean, honestly, to be completely frank with you, nothing could happen. That you have that chance of nothing can happen. It's all a gamble.
Yeah.
Insurance in general is a gamble. You may purchase insurance and pay for insurance for 30 years and never have an accident, and all that money technically is just wasted, right? You never needed it. It's all a gamble. But if you carry those low liability limits and that person is injured and they have a lot of problems, they're going to be more likely to go seek legal, advice. They're going to get, they're going to lawyer up, they're going to get a lawyer, and they're going to get legal advice. And the first thing that lawyer is going to do is do an asset check. And if you're with somebody who has assets, who has cash, that they're going to be like, let's go, because that lawyer also wants to make money, right? So that lawyer makes more money on the more that they can settle on. So if they find out that you have assets, that lawyer is going to be more gung-ho to push that client to go after you.
Well, so and that makes sense, but can the insurance company not pay out because I'm using a personal vehicle as a work vehicle and I don't have a commercial policy? Like, are there issues there? Because when I talk with guys, Austin is not my agent. He's an amazing guy. If I didn't have such a sweet deal with the company I'm currently with, I would switch over to Liberty Mutual because his rates were really good when he quoted me. I got too sweet of a deal right now not to, but I really like Austin, and he's super smart and he knows his stuff. So when I talked with my agent, he's like, yeah, don't worry about it. Like, you don't need a commercial policy. You're going to pay through the roof. Like, nothing's going to happen, blah, blah, blah. So, I mean, I trust him, but is that legit? Like, is it fine that I'm using a personal vehicle for a work vehicle and my insurance is going to cover it if I sit there and I'm using it for work purposes?
Right. It depends on the type of line of work that you're doing, So, like, what they want to see is, like, if you're for a real estate agent and you're driving clients around all the time, that's something that's going to be commercial, right? But you're just driving a truck from point A to point B, getting there, right? That's the same thing as somebody commuting back and forth to work. Because when you go to a job, you're just commuting back and forth to work. So in your particular situation, yes, that you could have a personal policy for your vehicle. It's not going to cover your equipment. It's going to cover your trailer. If you have a trailer, you're towing a trailer, it's going to cover the trailer. It's not going to cover the stuff in the trailer.
Yeah.
But it'll cover the vehicle and cover the trailer. That's not a problem.
Okay.
Your agent will be correct in telling you that.
So when would you need to get the commercial policy? Is that if I have company trucks and like crews and they're driving the company trucks, because then the commercial policy covers whoever in the truck, right?
Correct. Yeah. So, I mean, if you have a fleet of trucks, something like that, or if you're, like you said, you have a crew and you have other people driving it, because you're not going to go add all these people as drivers to a personal policy. That's just, they're going to ask questions. They're going to find out, okay, these trucks are really used for business. This commercial. So yeah, if you're having multiple trucks and you have crews and people driving, that's a different story. You need to have commercial insurance.
Okay. Anything else on like the collision or comprehensive or underinsured? You got anything else on those?
Yeah. So I was going to, another important, so talking about higher liability limits for your bodily injury, make sure that you're protected, for your assets. Minimum for somebody who's a homeowner, I recommend minimum at $100,000 per person, $300,000 per accident with $100,000 in property damage. Ideally, I would like to see you at $250,000 per person, $500,000 per accident with $100,000 or more in property damage. Okay, that's ideally.
Mm-hmm.
Another thing with the uninsured motorists, especially for business owners, this is a big one. Okay, it's because health insurance is a big thing, right? You don't, as business owners, we either don't have health insurance, or the health insurance is super expensive with really high deductibles, or whatever it is. So if you're somebody who doesn't have health insurance, or you are somebody who has really high deductibles and everything like that, that's where it's really important that you have the uninsured and underinsured motorists. Because if you don't have health insurance and you're hit by somebody who doesn't have any coverage and you're really hurt and you have only $15,000 for that coverage, that's not really going to go anywhere for you. That's going to take care of your first day at the hospital, and then everything else is going to come out of pocket because you don't have health insurance, right?
Mm-hmm.
So that's why carrying higher bodily injury, and you can't have higher uninsured motorists than you do bodily injury. So you can't just go with 1530 on the bodily injury and then say, oh, for myself, since I don't have health insurance, I'm going to do 250, 500. You can only insure yourself for as much or less than you insure others. Okay. So that's another reason why, especially those business owners who don't have health insurance or don't have the greatest or really high deductibles, more important that you carry those bodily injury liability limits so you can bump up that uninsured motorist. So if you're hit by somebody with low limits or no coverage at all, that you can still go to the hospital, get your injuries taken care of, and now you're not dealing with the financial burden because you can't sue them because they don't have any assets or they're just, whatever teenager, whatever it is, there's nothing you can go after. That's why it's another reason you carry higher limits.
Okay. Now, oh man, I lost my train of thought. So with that, I know at one point I had higher coverage on my truck and then I had to change it. And they said that both vehicles on the policy had to have the same coverages. Cause I think at one point I had like 500,000, 1 million.
Okay.
And then I wanted to make a change or something like that. And they were like, well, you got to put that on your wife's vehicle too. And I was like, well, no, like she's not driving around for work and stuff. I don't need that kind of crazy coverage. I was like, the minute people see I got a business, they're going to immediately get hurt. Like,
right.
So is that something like if you have multiple vehicles on the same policy, do they all have to carry the same coverage amounts?
If they're on the same policy, yes. There may be, there are some companies that I don't even think they're doing it anymore, but there may be some companies that separate them out per like each vehicle. Mm-hmm. But everyone that I know of nowadays, it's whatever, that's the liability limits for the policy.
Okay.
The only difference between each vehicle is whether you do comprehensive, collision, and roadside service and all that stuff. But as far as your bodily injury, your uninsured motorist and everything, that's all going to be same. That's the policy coverage. So you could have 1,000 vehicles on that policy. They're all going to be that coverage.
Okay. So because I had to change my rates and because you educated me, I went and picked up an umbrella policy. So Tell me why I want one, what it's going to do for me, and how I can kind of have lower liability limits because of it. Not super low, but it gives you wiggle room.
Sure. Yeah. So a lot of companies, so an umbrella policy, what it is it's typically $1 through $5 million worth of coverage, whether it's $1 million, $2 million, $3 million, $4 million, $5 million. That's the typical. You can get more than that through some specialty companies, but it's just excess liability. Okay. So, and it's cool, especially for business owners, because it covers a little bit more. Okay, it covers like libel, slander, things like that. So it covers a little bit more, but it's excess liability insurance. So if your liability limits on your auto or your home policy is exceeded, and again, they're going after you, they sue you, because again, you don't have to be a millionaire to be sued for $1 million, and they're going after you, then that's when your $1 million, $2 million, $3 million, whatever umbrella policy steps in. So, how you can get away with maybe carrying a little bit lower worth of coverage is a lot of companies require you to carry your base limits at $250,000 per person / $500,000 per accident in order to qualify to be able to get an umbrella. Okay.
Okay.
So you don't have to carry the 500 / million or the million coverage. You can bump it down to 250, 500 and then get $1 million or $2 million umbrella. Okay. On top of that. Now, some companies will also allow you to carry 100, 300 and get $1 million umbrella, or, and get an umbrella on top of that too. So that's another way. If you have a company that will do that, you can lower your limits to 100, 300 potentially, save a little bit of money there, or increase it not as much, and then still be able to purchase that $1 million or $2 million umbrella on top of that.
Mm-hmm.
So that's what that umbrella policy does, though. It's excess liability. So if your liability limits are exceeded and they're still going after you. So again, this is somebody with a higher net worth, homeowner, maybe kids, a pool, this owner, multiple homes, a lot of cash, maybe own their home outright. Elderly people, I always suggest doing this, people who are in retirement age and they own their home outright. That's $300,000-$400,000 sitting right there that somebody can go after, right? Yeah. They're going to be like, again, you get in an accident, they do an asset check, they're like, oh, this guy owns his home outright. Let's go after him. So
yeah, that's not fun.
So
right. No, and I mean, you're right. It's scary stuff. So after I heard that, I called up my agent. Look, guys, I picked up $1 million in coverage for $25 a month. I'm spending $300 a year. But I have
$200-$300 a year.
It's peace of mind. So here's the thing. Okay. So like Austin was saying, an ambulance ride, $5,000, $6,000, $7,000, $8,000, who knows? Every day you're in the hospital, there's $1,000. Who's to say you don't get in a huge multi-car pileup? Like I saw, I don't know, it was probably like a month ago or something, some accident in Chicago that was like a 60-car pileup on the Eisenhower, which is a main expressway there. And if one person caused that, man, you got 59 people, 59 cars, who knows how many people coming after you. That $1 million coverage from the umbrella policy plus whatever your limits are is not going to cover that many people. So at least you had the extra $1 million, but these days that stuff can add up quick. And it doesn't just go towards your auto, like he was saying. It's an umbrella policy for me. So it's for my auto. So it protects me and my wife when we're both out driving around. It's on my house. So if my house burns down, I have that coverage. If for somehow my house catches the house next door on fire, it's going to cover that house.
Right.
Like and $300 a year.
Children too, let's say, like I heard a story, and one of my friends from high school, he was playing baseball, at school, it was a game, and he was a pitcher and threw the pitch and they hit it and they hit him right in the side of the head and he dropped and had seizures, had a seizure and he had to be airlifted in a helicopter to the hospital. I think an airlift from a helicopter is like 20, 30 grand just for an airlift. That covers that kid who swung and hit the bat, even though it wasn't really his fault.
Yeah.
He's actually liable for those injuries.
Oh my goodness.
Right. The family of my friend who got hit in the head can go sue them. They have the ability to go sue them and go after homeowners insurance and everything like that. Right. So now that's not, it wasn't that much money. Your typical homeowners insurance, $300,000 would take care of that situation, but it covers your kids too. So if you have children who are in sports or, whatever it is, especially teen drivers, you got a teen driver on your policy, even another reason. They may be great teen drivers, but things happen and and people get really hurt in car accidents. And if they're deemed at fault, that umbrella policy covers you.
Yeah. No, it's some cheap peace of mind. That's for sure. Like I said, it's
Right.
costing me $25 a month for $1 million. Like $1
Budgeted
million,
in.
and we all know $1 million can go real quick. But I'd rather have that extra $1 million for $300 a year than not. And honestly, if you would have asked me 10 years ago, let's see, I'm 37 now. So if you would have asked me at 27, I'd have laughed at you and told you I'll keep my $300. And so
Right.
I've gotten older, I've gotten a little wiser, and my mindset has changed.
Right.
I could have cared less what kind of insurance coverage I had at 18. I was invincible and nothing could stop me. And
Right.
I mean, I didn't have a dime, so there wasn't anything to sue me for, but things change. We grow up, we build assets. We just, man, you got things to protect, and it's not worth getting screwed out of everything you've worked so hard for over a couple $100 a year, in my opinion.
Mm-hmm.
All right.
Exactly.
You got anything else on auto? I think that's pretty thorough, but if you got something else, I'm happy to hear it.
Not that I can really think of. I think that's pretty good.
Okay. So next up, you do specialty coverages. So let's kind of get into that. Like, I know, obviously, most people know, like, you could call up Haggerty and you broker with them. So like, if I have a 69 Mustang or something like that in mint condition, like, I can get that specialty insured. But there's so many more things you can do. So like, what are some of the things we can do with insurance and help better protect ourselves as homeowners and contractors?
Sure, definitely. So, I mean, going with, like, separate policies like that, let's say for jewelry or it's a marine policy for your equipment and tools and stuff. Yes, your personal homeowner's insurance, a lot of companies, a lot of times you could put that jewelry or you could put that equipment, or tools, if you have appraisals and bill of sales and stuff, you can put that all on your homeowner's insurance. Okay. And, obviously you pay a premium. The problem with that is if you ever have a loss, on that property, that's gonna go against your homeowner's insurance. It's gonna be a claim against your homeowner's insurance. Yeah, it's worth it, in the end because you're gonna get the money, but in the long run, it's not worth it because there are other options out there where you may be able to pay a smaller, a little bit more money. They're usually a little bit more money than putting it on your homeowners, but very minimal, pennies on the dollar difference that you can go do that. And that's a company that specializes in that type of policy, right? Like Haggerty, some companies will do a stated amount for your vehicle. Say, oh, your vehicle's worth $70,000. Okay, well, we'll insure it for $70,000, as a stated amount. But then you go file a claim, and it's a hassle because they don't specialize in it, right? But Haggerty has been doing it for years. That's what they do. They insure specialty vehicles, and they do it right at the right price. So pay the extra money, go with that separate policy, because you're going to go with a company that knows what they're doing, and they're insuring it properly. Again, you may pay a little bit more, pennies on the dollar difference, but if you ever have a loss, one, they're going to handle it way better because that's what they do every day, all day long, and that's all they do. Mm-hmm. And two, it's not going to affect other rates, right? So, for instance, if I put a $10,000 ring on my homeowner's insurance policy and my wife loses her ring or gets stolen, my rates are going to go up. Yes, she's going to get a new ring, but my rates are going to go up maybe $800 a year, $1,000 a year, right? So now I'm thinking over the next 5 years, a few $1,000s, that I'm having to actually pay for that ring. Versus I have a company like Jewelers Mutual where I can go insure my wife's ring for $10,000 for basically the same price, like $20 extra for the year. And if I go file a claim, they work directly with the jeweler and make sure everything is smooth and easy and take care of it and get it fixed or replaced. And my wife gets a new ring. And now my homeowner's insurance doesn't go up at all.
Yeah.
Not a bit. Not one bit, right? So now I just got a $10,000 ring for $10,000, and, fully replaced. versus now my homeowner's insurance went up a few $100s a year. I'm actually paying part of that insurance.
Yeah, well, and the premiums on the specialty policy probably aren't going to go up at the same rates either.
No, definitely not. Definitely not.
So, for example, I picked up $5,000 in coverage on an inland marine policy for my tools. Right. I'm going to have to up that because I don't ever want to have to use my general liability coverage on my tools. So my inland marine policy covers $5,000 in tools, has a $100 deductible. My general liability insurance will cover $5,000 in tools. It has a $500 deductible. I don't know what sounds better, losing $400 of it or, only $100. Like, it's a no-brainer. So the policy was $143 a month. Now the cruddy part for me is that I had to file 2 claims against it last year, and I'm worried I'm going to get dropped at this point. So when I had my accident in December, and I was like, okay, my truck's not going to cover it. Okay, I got my homeowner's policy I can call in on. I've got that inland marine policy I could do a second claim against. I got my general liability. So I'm calling with all these insurance companies, and I'm trying to find out who can do what's going to be the best route. And it came down to suck it up, put the second claim on the inland marine policy, and I'll find out in like October if they're going to drop me or what my new rates will be, and if I have to go shop it out to another company. So I pay higher rates for a couple of years. But at $143 a year for $5,000 in coverage,
right?
The 2 claims I filed, I think were like $3,000 to $3,500. I'm doing pretty good. Like, even if I had to pay $300 a year for coverage for 3 to 5 years before it drops off, probably, right?
Yeah, even if your price tripled, which it probably won't triple, but even if it tripled, you're still saving money. Exactly.
Like, I'm still going to be ahead at the end of the day. I didn't have to replace the tools out of pocket. I could have, but I didn't have to. Like, guys, this stuff is cheap. And yeah, I know we all want to put more money in our pockets. That's great. But crud happens. And especially those of us that use trailers instead of vans or box trucks, man, those things are stolen every day of the week. And you could lose everything overnight. And I'll tell you what, both times the best people I've ever dealt with insurance wise have been my inland marine people. They're like, yeah, just send us the receipts. Yep. And then literally I have a check in a week. It's been amazing. Like, the truck people were difficult. I don't want to deal with my home. Like, the inland marine people, they're just like, yeah, send us the receipts. They don't even care. I just send them receipts and they say, cool, we'll process it and get it out. They don't want to see damaged tools. Like, they didn't do nothing. They just cut me a check.
It's because they focus on one thing only, those inland marine policies, right? When you have homeowners, when you have insurance companies that are focusing on, auto, home, umbrella, life insurance, all this, like, there's so many other moving parts. But factors
it's through State Farm, though. Like, they are doing all of that. It's just that group of people. They're just like, yeah, whatever. Like, just send me the receipts. We'll get you a check. And I'm like, okay, cool. You guys are rock. Like, I'll file all the claims. So, it's kind of a no-brainer. Like, talk with your agents, get educated, have them educate you, go over your rates, do reviews. Here's something else. At one point, I was talking with my agent, and I bet you come up with this all the time. Tell your agents you want to mess around with, like, the deductibles. Because I had it at a $100 deductible, and I told them to move it to a 0, and the rate changed by, like, $1 a month. I don't know. Yeah. Ooh, $12 a year. What sounds better? Like, it's a no-brainer. Just play with your stuff.
Not have a claim to break even. So, no-brainer. Yeah, I always tell people, I'm like, this is right for you. Budget it in and don't look back. Like, these types of coverages are important. Budget it in and don't look back. Make sure you're protected. Because once it's in the budget, it's out of sight, out of mind, and it's done, then now you're covered. You don't have to worry about it. Like, people are so hung up on the extra $300 a year, blah, blah, blah. You can find it within your budget where to protect yourself properly. Mm-hmm. Just budget it in and don't look back. Because if anything ever happens, you're going to be grateful you paid that extra few $100s a year.
I agree. And as you build up wealth and assets, like, you can get rid of stuff. I mean, I'd rather pay a couple $100 a year and have somebody else pay out instead of me paying out of my pocket. But that's kind of a conversation for another time. I'll have to get the financial planner on here, and we'll do one of those episodes.
Right? Yeah, like if you're at a point where you can self-insure and you're okay with that, and you think you're liability, then fine, self-insure. I mean, that's your choice. But if you don't, if you're like, I can't go replace those $5,000 worth of tools tomorrow, then you should probably pay the $140 because that's a lot easier than $5,000.
Yes,
you can find $140, but a lot of people can't find the $5,000.
Yeah, for sure. Especially when you're starting out. I mean, I don't even care if you're doing millions a year, man. Like a couple $100 a year, it ain't gonna hurt you. Just spend the money. It's just dumb not to. You're hurting yourself. Man, you got anything else? That's really, all of these are really good insights. I love it. It's super educational because honestly, it's not something that people go over with you. Sadly, like my mom told me I had to start paying car insurance, and I paid car insurance at 16, and then I went out and moved on my own, and I was just like, yeah, whatever, just make it as cheap as you can make it. And it got to a point where I was, you came in and I was like, well, man, I hope I got better coverages than that. And I did. I had better than state minimum, but I upped them. I think I was at 100, 300 or something like that. And I was like, no, give me more. And it doesn't change a lot, guys. It really doesn't. The more you buy, the cheaper it gets. It's really, I guess there's a saying in insurance that I've heard lately, and it's the first million is the most expensive.
Yeah. Yeah, and so real quick here, that just made me think of it. Somebody coming in getting a new quote for me, coming in with state minimums at $1,530, versus somebody coming in with 100, 300 or higher limits. Automatically, the 100, 300 person is looked at as a lower risk by an insurance company, and automatically they are going to get a better rating tier than somebody coming in with 1,530. So if you're wanting to save money in the long run, it's actually better to bite the bullet now, get the higher coverage, and then as the years go on, if you go shop it around, in general, you're already going to be put in a better tier and get better insurance rates just by carrying the higher liability limits.
Interesting. All right. Oh, here's something. So I remember you were saying the online companies. They'll sweet talk you with like that really low upfront rate. What happens after you got to renew in 6 months?
Right. Yeah. I mean, a lot of times it's gonna bump up quite a bit. They bait you in with the good rate for the first 6 months, and then your rates go up, and then now you have to go shop your insurance. So, not all insurance companies are created equal. Too, you may have a $300 home policy, and another company may have a $500 home policy, and it may all look the same. You may have the same dwelling coverage, and the same liability limit and the same personal property coverage. It may look all the same on paper, but the $500 company covers more, right? Covers more things that are going to happen in your house. One company may not cover slab leaks or certain roof damages or certain water damages, but the price is $300 for the year. Mm-hmm. Versus somebody that when you could have paid $200, and then you go to file a claim, and now you're out of pocket thousands of dollars because they didn't cover that, but they didn't tell you they didn't cover that. You have to read the policy. You have to read the policy language to see what's covered, right? Versus now you're like looking back, I could have paid $500 and it would have been covered.
Yeah. And I honestly read the policy, because I found out recently I don't remember who I was talking to. My homeowner's policy does a percentage. There isn't like a $500 deductible, $1,000 deductible. Right. It's like 5%. So whatever it ends up being, if it's $100,000, I'm paying 5%.
No, it's actually 5% of your coverage. So are you talking about on your home?
Yeah. You're gonna know better than me, but yeah, I was flabbergasted, because I was like, "What? No, I don't want to pay that."
Yeah, it could be even worse than that, actually, because it's 5% of your dwelling coverage. So, let's say your dwelling coverage for your house is $500,000,
Mm-hmm.
and you have a 5% deductible, your deductible is $25,000. No matter what the claim is. If the claim is $10,000, your deductible is still $25,000. They're not covering it, so you're not going to get any payout until after that $25,000 in that case.
Yeah,
that's something that you need to pay attention to as well. Is look at your deductible. Is it a percentage deductible? Calculate that percentage on what your dwelling coverage is. Because if it's 1% on 100,000, your deductible is $1,000. That's fine. That's going to be typical across. But if you have a $300,000 house, now your deductible is $3,000. Now the price doesn't necessarily. It may be $100 cheaper for the year, but the other guy has a $1,000 deductible.
Yeah.
Immediately, if you ever claim, they'd save you $2,000. So, that's another thing to look at as well, because and your home insurance has inflation protection, so your dwelling coverage goes up every single year automatically. What does that mean? That means your deductible goes up every year automatically, because your dwelling coverage goes up and you have a percentage deductible. Your deductible goes up every single year.
Oh, good stuff. That doesn't sound fun. I need to get out of that coverage. I need to get out of that coverage.
Yeah,
man.
And it's not always bad. I mean, it's not always bad. Percentage deductibles aren't always bad. It depends on what you just need to understand them. You just need to know what they are.
Yeah.
Because if your dwelling coverage is at $250,000, 1% of that's $2,500 deductibles. $2,500 deductible. You may be okay with that. That might be something that's suitable for your household, that you're okay with coming up with $2,500 in the event of a claim. I'm all for that.
Yeah.
But it's to understand really what it is, what you have.
Correct. I mean, the only thing I have going for me is that my townhome is set up more like a condo, and my HOA covers has a blanket policy on all of the buildings, so I only have to cover studs in.
Right.
So I get a frame back, and I don't have to pay a dime on that other than my monthly HOA fee, which covers some other stuff. But man, dude, so many insights, so much information to think over. Guys, this was, we're going to be a little short of the hour, but I'm not super worried about it. Take the time you're saving listening here, get on the horn to your insurance agent, and set up 30 minutes, man. 30 minutes with them. Go over your coverages. Make sure you and your family are protected. That's what's really going to matter here. And that's why I wanted to sit down with Austin and do this, because I bet you a lot of you were in the same boat as me where I was a year ago, and I don't want anyone there. I don't want anyone to have to deal with it. You should be able to call up your insurance company, pay your deductible, and move on happily ever after. There shouldn't be a struggle. There shouldn't be a fight. Like, I want everybody to be okay. So take the time, talk with your agent, and if your agent doesn't want to work with you, find a new one. Austin, all right. Any last minute stuff?
Yeah, no, I mean, again, I just want to, thank you for having me on here. I'm, happy to, educate where needed. If anybody listening is open to, having an insurance review, I'm licensed in multiple states, and I would love to help out, love the opportunity to, sit down and talk about your insurance, see where we can protect you better, and save you some money. Also, too, if any questions come up, I mean, insurance, there's a lot to, I may not have addressed absolutely everything or all of your questions. So if there are any questions that come up, feel free, to reach out to Kyle or on the platform, or come up with a list of questions. I'd be happy to come back on, address any questions if needed, or send emails out with, answering any questions. That's what I'm here for. I'm here to try to educate and help you guys out anywhere you need. It's my responsibility as an insurance agent to make sure you guys are protected, and I'm happy to do that where I can. So again, if anything comes up, reach out and we'll help out.
Okay, let's do this. What states are you still licensed in?
Pretty much everywhere. Not Washington. Illinois, Indiana, all of those, Michigan, Tennessee, Georgia, a lot of East Coast, North Carolina, South Carolina, New Mexico, Texas, Utah, Colorado, California, Nevada, Arizona, obviously, Minnesota, Michigan, lots of places.
Okay. Well, all right. So how do they get you? How can people, if somebody's interested in a quote, how do they get a hold of you?
Yeah, so, my contact information, pretty simple. I'll give you my phone number. My phone number, if you want to give me a call, 480-308-5439. My email address, Austin, AUSTIN, Thompson, THOMPSON, @libertymutual.com. Either works. Reach out to me, give me a call, shoot me an email, send me your deck pages. I'm happy to review everything and see if we can help you out.
There you go. Don't flood the Facebook group or my inbox or me with emails. Get directly a hold of the source. Not that I wouldn't pass it on. I'm gonna let you guys do your thing. If he can help you out, he can help you out. I bet you if you're in a state where he can't help you, he's gonna get you pointed in the right direction so you can
Definitely.
get help. Awesome, dude. Thank you so much for your time. Enjoy your wife and kids, and you're crazy like me and picked up a couple of puppies lately. So have fun not being able to sleep at night and listening to whining. Yeah, no, dude, thank you so much. I appreciate it. And we will talk soon.
Sounds good, man. Thanks again for having me on. It was a pleasure.
No problem. Bye. That's all the time we have for this week. To keep the conversation going, head on over to the Floor Academy Facebook group. Be sure to subscribe so you can hear each and every episode. We can be found on Apple Podcasts, Stitcher, Spotify, iHeartRadio, Google Podcasts, and most major podcast directories. Don't forget to leave a review and let us know what you think about the show. If you would like to be a guest, have questions or feedback, you can email us at flooracademypodcast@gmail.com. You can help support the show by becoming a patron over at www.patreon.com/flooracademy. Remember to learn while you earn.